You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody, welcome back to the Option Block, everyone's favorite. I know it's my favorite. I hope it's yours. Bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to call around these parts, the old Options Insider Radio Network, beaming out to you straight from our Options Insider HQ here in sunny and scenic Chicago. 13 programs on the old network, including 450 plus archived episodes of the old Option Block. Where can you find all of that goodness / madness? Well, of course, theoptionsinsider.com. Click on the Insider Radio Network tab, top left corner of the page, and you're good to go. Of course, while you're there, you can also just hit on the homepage player there, and whatever the most recent episode of whatever is being uploaded to the network at that moment is available. You can listen to that right away. Or, of course, find us iTunes, TuneIn, Stitcher, wherever you find your favorite podcast programs, or just grab our mobile app available for iOS, Android, and the Fire OS. It's all there. It's all ready for you to download and access and get a hold of some options goodness. And speaking of options goodness, we couldn't get that together at the last minute, so we got these guys together instead. Starting with the Rock Lobster himself, Mr. Andrew Giovinazzi of Options Oddities fame, as well as a few other stops around the old options landscape, including a place called The Pit and a few others. And he's beaming in from his new scenic and lovely office studio there in the hinterlands of Maine. Welcome back to the program, Mr. Rock Lobster. And how are you enjoying your new studio / office?
I'm enjoying it quite a bit, but I would almost have to invite Mr. Tusaw in. And should we take umbrage on being slighted as we just came in to host the show? I believe there was he slung an arrow at us.
There's slings and arrows of umbrage. There's always umbrage to go around in this program, sir.
Yeah, throw some umbrage. Yeah, count me in for some umbrage. I'm in on that.
Well done. I will take the umbrage, even though Andrew, if it's a rainy day, he has umbrage. That's just the way he is. But you sound good there in the studio, and of course, we are also joined that mystical, disembodied voice there is none other than Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program. To you as well.
Umbrage is like long premium. You always want to have a little bit in your pocket just in case.
I can see that. I certainly concur, sir. All right, with the team assembled and a little bit of umbrage in tow, it's time to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the name implies, this is the portion of the program where we break down what was moving, what was shaking, what caught our eye out there on the old street today. Was pretty much a strong upside day, and the strength of that upside depended on where you were looking. We are recording this on Monday, July 16th. For all of you playing the home game, there are some earnings to get to. We'll get to those in a bit. But first off, the S&P closing up strong today, up about 0.8 of a percentage point or so, or about 16.5 handles to close at 21, just a hair shy of 21.24. The Dow, a bit of the laggard, up less than half a percentage point or so. And the NASDAQ 100 leading the charge to the upside, up nearly 1.5%. on the day. So just off to the races there from a tech/NASDAQ perspective. And of course, as you might imagine, a little bit of a different story than we were talking about volatility last week. Last week, we were flirting actually broke through very briefly the 20 handle on the VIX cash front this week. Much different story. Market certainly pricing grease like it's in the rearview mirror and hitting vol accordingly. VIX cash once again ticking heavy to the downside, off over a handle, 1.08 points today to close at 12.15. For those percent of percent lovers, yet another 8% coming out of the old VIX cash. So like we say, volatility is kind of like a balloon, and when it pops, it pops. That volatility is popping pretty hard out there in good old VIX land. Mr. Rock Lobster, we were joking about it last week or 2 weeks ago that, about threatening the 9 handle. Now it's not so much of a joke, is it?
No, yeah. The definitely as far as volatility goes, you're looking from now until the middle of August. If Euro's in the rearview mirror and, the China thing seems to be abating, which we have another as a discussion on the trading block. But what's going to move all? This is kind of where it sets up to do something really nasty and low. And that's where that's basically where I think, we talked about it on vol views, and I was thinking of the vol products trading at some new lows, and I believe we're hitting them today.
Yeah, not to get too vol viewsy in here on the old option block, but all those people, you kind of have to feel for them a little bit, all those people who were just loading up so heavy on upside premium there in the VIX options, in particular July. So near-term upside. Granted, there are a lot of them are probably hedging against other positions that are probably doing all right now, but still, they had that brief window in which if they wanted to close out positions, they could have, and probably done so for at least a decent level, or certainly the best level we've seen in a while. And they missed it, and never since have we looked back to those levels. So all those people, Andrew, who were buying, 22s, 23s, 26s, sometimes higher in the July strike chain, probably feeling a little bit sad, at least on the option side. Other side of their positions, probably big smiles on their faces. But we look at the options game here, and from an options perspective, probably some sad faces there.
I think there could be one or two sad faces. And I think, like I said, I think that everybody's gotten a little savvier. They buy volatility, and then they buy the underlying, because they've seen this movie before, and it ends up probably working out okay. But that's what I predict has happened.
We shall find out forthwith. But before we do that, let's dive on into what Uncle Mike was watching over here, what caught his eye in today's flurry of upside activity. And let's see also if he has identified his new bullish love interest, shall we say. We all know he has moved on. He had a bit of a rough split from Apple, maybe an amicable split. It worked out all right for everybody involved, I think. But he's looking for his new love out there. Perhaps he has found it. Uncle Mike, what say you? What caught your eye today, and where is your eye wandering these days, from a stock perspective at least?
Well, the Jobs Foundation still calls me every day and asks me to get on board with Apple again. But, I got to just tell them, look, I think it's over right now. Just kidding, of course. Just looking at today, I think that right now a lot of the fear is gone in the market. But what I'm really focusing on is the 2134 level on the SPX. I think that's going to be a key number that we're going to have to break through. That's the all-time highs. We're knocking on its door right now, but this is something that the thing that I'm noticing a lot today is that we've knocked on the door. We've been channeling all year. This has just been the year of the channel, so to speak, since January. We've seen this movie before, in that we had a big run-up in early February. We had another run-up in March. We had another run-up in April. It kind of stayed up, but then went down. Then we had a run-up in May, had another run-up in June, and then now this is just the latest version of where we're having a run-up. I am the eternal bull, as we all know, but it's one where we got to break out of this channel. We've been here before, and we got to get through it if we want to see any higher numbers. So that was the first thing with which I was noticing. The other thing that I'm noticing is that bonds are still kind of sitting there. We're kind of channeling around, like in the TLT area. We had an update in the bonds in the bond market today from the standpoint of price. So watching that. And then in terms of an individual stock with which I'm watching, I don't have one with which I'm watching quite to the level of Apple, but just to give you an idea of some of the other things that go on in my world, besides just what I typically talk about on the show, J&J, I just recently closed out a short put on that. I'm kind of doing some wheel trading with Johnson & Johnson. They just had earnings recently. 3M, what's the ticker symbol for 3M, by the way? Ba-bumsh. That's a
QZY, I believe.
Something like that. But just do another short. I'm doing some wheel trading with that. And there's just a couple of other stocks with which I'm doing some wheel trading, but it's nothing of any very big significant size in relation to the entire portfolio. I am long McDonald's as a smaller position. I'd like to sell some covered calls on it, but I'd also like to see it get above $100 before I start selling some covered calls on it. As well as Verizon, same concept. I would like to see it get above 50 before I sell some covered calls on it. But in the meantime, those stocks are paying a dividend, so it's not like it's dead money. So to answer your question, I still do not have the commitment to one specific stock like I did with Apple. So I guess I'm just playing the field and dating all these stocks.
Uh-oh, quite the promiscuous trader you are these days. Speaking of promiscuity and stocks that just tend to move, we're going to tend to move our glance over here to another big mover and shaker out there in the tech landscape. Of course, Google. Good old GOOG reporting today after the bell, and it seems like the number is out. It was a bullish day, I think you could say, not euphemistically at all here in Google today, with the stock rallying nearly 20 handles as we saw some substantial moves out there during the session. You got as high as about 580 and 68, I think, at one point. So just a crazy run. Ended up closing nearly 19 handles. We saw, of course, a lot of options activity out there. We saw, it looks like about a little over 110,000 contracts going up today. That compares to their average of just about 25,000 a day. And a lot of that love centered on the calls. Not surprisingly, given the fact that the stock was on a tear today, up about 3.5%, about 2.5 to 1 calls over puts today out there in Goog land. And looking at what they were pricing in on that straddle. That straddle went out right around about $21 or so, which worked out to about a 3.5% move or so, which ironically is percentagely almost exactly the same as what they did last cycle. Last cycle, they moved about 19 handles, which was about a 3.5% move there as well. The stock was a little bit lower than, if you remember. So interesting stuff. Pretty much pricing in an exact repeat of history, and so far at least intraday, that seemed to be a pretty decent bet. Here now in the after hours, the stock is kind of hovering. Actually, no, I'm sorry. In the after hours, it's off to the races even more, so that 19 handles it made intraday is a pittance compared to what we're seeing in the after hour. Stock already trading at about almost 620. Up about 42.5 handles. So that $21 looking fairly cheap right now. They actually got almost a 2x move out there from an overall underlying perspective. Again, we'll see where we open up tomorrow morning, but looks like people loving the Google earnings. That came in right about $7 a share versus the $6.70 consensus estimates. Again, that's just surface. We haven't dug into the numbers, but so far at least, first blush, the street liking what they're seeing. Mr. Rock Lobster, any interesting developments out there in the pit chat today in terms of positioning ahead of Google?
Yeah, I looked at it. This is a killer. I'm like, yeah, because this is a long personal holding for mine. But we were looking at them like, the straddle, they look cheap, but I didn't do anything. Didn't buy them.
Famous last words, sir.
Yep, they did. And it's funny because I'm just looking at a position I was talking about with one of my pro traders earlier in the week. That was basically a kind of a buying some anyway. But they should be very happy today on that one. So we talked about it, and it did look again. It looked underpriced, so at least we kept clients from selling it. I guess that's the easiest thing I could say. Don't sell it.
We kept clients from selling it. I like that. Hey, you know what? If you got to contribute somewhere, at least keeping them from blowing out is a good way to go.
Yes. So that was definitely a non-sale for me.
Mr. Uncle Mike, any thought to some of these loftier tech names now that you're out of Apple, or does GOOG hold no fascination for you?
I like Andrew's philosophy. At least we told him not to sell it. I like that one. That's good. No, not in particular. I think that just with everything that's going on, we're coming into earnings season. We do have the fruit company coming up on the 21st. So for old time's sake, I'll definitely I'll definitely take heed and take a look at that, kind of like, I guess, going to your ex-girlfriend's wedding type of thing. The other one that I'm going to be curious about coming up in about a month or so is Alibaba. I think that just with everything that happened with China and the fact that Alibaba didn't get totally pummeled makes me think that one could be interesting. So that would probably be the one that I'm watching. But once again, I'm playing the field.
Wow, things are living large out there in St. Charles. Well, we'll keep an eye on you, sir, and let us know if you settle down with another name or two. Baba, an interesting choice. I probably wouldn't have guessed that at first blush for you, but you never know. You're a different man now that you're out there playing the field. So
there you go. So
you're not in this committed relationship to Apple any longer.
Maybe I should go on a date with Netflix. What the heck?
They've made widows before. Maybe they'll make a widower out of you these days with all the crushing of premium that they do out there. But c'est la vie. It might be a fun ride all the way down. So, hey, go for it. All right, before we get too far into these crazy metaphors, we'll keep an eye on Google as we move on to some other things. Really quickly here, just as a bit of an odd anniversary, except we're recording this on July 16th. And the July 16th, 2004, actually the day, it doesn't seem like it was that long ago, but it was the day 11 years ago that good old Martha Stewart sentenced for insider trading in the old ImClone scandal. Remember, she saved herself, what was it, $50 or $100, maybe $150,000, and in the process pretty much ruined her life and her company and everything else. So for those of you playing along, it doesn't seem like it's been that long, does it, Andrew?
It doesn't. It's almost like it's yesterday, to be honest. Like it's yesterday.
Who doesn't remember where they were when Martha Stewart was sentenced? Of course, everyone knows. Kennedy, Martha Stewart, same level.
Exactly. I remember that was like, and I think that was, and I'm trying to remember trading in Martha Stewart living. I can't remember if I did anything or not. Like, I thought that would be like a short-term bottom, but
was that one of the names in your pit out back in the day?
It was. I'm trying to remember, because that is normally I remember a lot of positions. That one is not coming back to me for some reason, but.
Yeah, speaking of which, she just pretty much gave up the ghost. She sold the remnants of that for a song. It used to be a multi-billion-dollar empire. I think she sold a lot of it for, a decent amount of money for us, 300 some odd million, but for what compared to what it was worth, certainly about a pale shadow of what it used to be. So she's
just a centimillionaire now.
Yeah, exactly. Poor her. But a centimillionaire, former felon, convicted felon. So there you go. We have that over her, sir.
Yes. Thankfully, we are not there. Next, let's get to the centimillionaire part. I'm all for that.
Okay, one thing at a time, sirs. We'll stay out of jail first. And then we'll do the opposite of what you do on the floor. On the floor, you do the hard leg first. Here, we'll do the easy leg first. We'll stay out of jail, and then we'll work on the other part, the hard leg.
Wait, hold on a second. You guys aren't billionaires?
Well, no, we already were billionaires. We're trying to cut down to centimillionaires, which is why we're talking about some of these crazy strategies out here, trying to ride Netflix down.
Less than billionaires.
Well, we understand. we share your snobbery. Speaking of snobbery, the people in our next segment probably aren't snobs, but probably more up to some dubious things. So without further ado, let's track them down. Let's dive right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we break down what's going on behind the scenes in the options market. What weird paper is afoot out there in the land of options? I know all you guys have been writing in and asking for this day. When are you finally going to talk about this name? When are you finally going to talk about this name? Well, it's finally here, listeners. Yes, we are talking about C&J Energy Services Ltd. ticker symbol CJES. Closing today about 11.50 or so, 11.44 here, off about half a buck or 4% out there in CJES world. This is a name that does about 1,300 contracts a day, doing nearly 18,000 today. So lighten it up from a CJES perspective, and certainly even from an odd block perspective. And this one certainly qualifies as weird. It started off with what caught our eye was the AUG 12 calls going up for some size 7,500 times to be precise, total of 7,501 going up on the day, so an extra one lot scrambling in there somewhere. Looks like paper selling for 70 cents and then putting up a block of stock there alongside it for about 750,000 shares at 11.60. So an interesting one, of course, sell call with the stock. You're, of course, synthetically shorting a put. I bring that up because we also saw some other paper out there that, when you think about it synthetically wise, makes you kind of scratch your head a little bit. We also saw what looked like a short put spread going up here as well, selling the 13.11 put spread also in August, 5,000 times. So if you're playing the home game, we've got a synthetic short put there on the 12 strike, and then you've got the short 13.11 put spread done 5,000 by 7,500 in the middle there. So a funky ratio, certainly a bit of a head scratcher. Again, maybe they are doing it all to shut down the stock side of the trade, but still, that would either way. This is a bit of a weird one. Mr. Rock Lobster, we love the weird ones. It's kind of why we do this show. I'm sure this one kind of made you go, when you first saw it, and probably still is.
I still have no idea what they're doing.
Maybe we should bring them in for like an intro to synthetics class, because when I first saw this, it really made me say, why on earth would you do this?
So you buy this as price, you buy the synthetic, and then you sell the put spread, and if everything works out, you make, I don't know, what do you make? I don't know how you can make money on it. The only thing I thought that could be possible is they rolled out of the stock position into the calls and then sold a put spread for kind of like a Texas hedge if they're rolling out of the stock. That short was just the short stock position was good. That's the only thing I can think of. Other than that, it just looked goofy to me.
And if you're not familiar with that term, Texas hedge, listeners, essentially they're doubling down. It's not a hedge at all. I don't know. I'm not sure where that term came about. Maybe some oil trader in Texas doubled down, double hedged by accident, and that kind of where it came from. But yeah, if you're not familiar with that term, it means they're not hedged at all.
Well, they do everything bigger in Texas.
Yes, that's true. That's true.
All the hats bigger, cars bigger. A ranch, unless it's 50,000 acres, that's not a ranch.
Why hedge when you could double down the other way? That just makes more sense. So
just a trade went up. It all went up spread, and one of the more. I have no clue how they're going to make money on that trades. So I just thought for an odd block special, it was. I didn't write it up for options oddities just because everybody in the room would have been like, that is the weirdest trade I've ever seen. Much better for radio.
Yeah, that would probably have lit up the entire room with questions, and rightfully so. If they did indeed see this one going up in the room, and you could probably spend a whole half hour on that. Listeners, if you're not tuning into Options Oddities every day, noon Central, 1 p.m. Eastern, tune in, listen to the Rock Lobster try to wrap his head around trades just like this one. Unfortunately, I know you guys wanted that one, but got to move on to another big name here in Odd Block, and this is another newcomer here to the Odd Block program, and this is everyone's favorite, Regions Financial Corp. Another one lighting it up today, averaging 2,554 contracts, doing nearly 8,000 today, and the lion's share coming once again, surprise, surprise, and some odd calls. This time, not so much upside as in the money calls, actually. The stock, of course, closing $10.39, kind of unched on the day or so. This is the name, like I said, doesn't do much paper, but did some paper today, including when we started profiling at 9,750 of the AUG 10 calls, going up for paper buy-in for 58 cents as the day wore on. Looks like another 1,000 or so went up for a total of 10,700 and change, all on open interest of 5,600 contracts. So clearly open in paper. Went up on the Philly as well. It doesn't seem like there's any stock to speak of there. Interesting stuff here. Again, more interesting more because perhaps they're closing and then flipping, another Texas hedge, or perhaps they're just really piling in to this strike. This is one of the more active strikes out here from an RF perspective. Either way, some interesting stuff. This position wasn't looking too good earlier today, but now it's pretty much unched on the day so far. So not too bad, all things considered. Mr. Rock Lobster, kind of a straightforward one, except for the fact that it's a little bit more in the money than we usually see people piling into in calls here on these little cheapy names, but still an intriguing one. What you take here on some call love for good old Regions Financial?
I'm thinking I kind of like the financials through the rest of the year because of interest rate spreads and just things overall are getting better. There's less, they're getting sued less, I guess. After 7 years of litigation, the government's finally running out. So I don't know. I just think they're buying some near the money calls and they want leverage and they want to get long. So I bet for the way everything's looking, talking to the resident bull, Mr. Tusaw, the financials have been looking pretty perky. So a name like this, it doesn't take stock only has to be up 30 cents for them to make really good money on these calls. So I don't know. I like it as a trade, given they gave themselves a little time too. So it has potential, upside potential.
A little bit of meat on those bones, as opposed to just all these things that are 8 delta. 13 cents. A little bit of actual meat on the bones instead. Never a bad thing at the end of the day. As you move on here to our final name, our final victim here on the old odd block. This is USB, not Universal Serial Bus, no, but US Bancorp closing today $45.86, up about 33 cents or about 0.75% or so on the day. It's the name that does about 5,000 contracts. Also lighting it up today to the tune of nearly 19,000 today. And a good chunk of that, over 5,000, close to 6,000 contracts coming in what looks like to be the old up and out. In particular, it started, the first leg we noticed was a July 44 call leg, lighting it up to the tune of nearly 2,700 contracts. For $1.82 versus the SEP 45. That was the other leg, so hence the old up and out going up for $2.12 as the day went on. It was 2,700 went up on the 44s, and the SEP kind was a little bit over 3,000. We get 3,043. Size open interest actually on both strikes, 6,600 on the Julys and a little over 3,000, actually 2,500 on the SEPs. So not enough to be closing on the SEP, and it doesn't look like that would be anyway. It looks like it's just closing out on the July 44 strike and then rolling on out. So selling out here on the July and then rolling out to SEP to keep the long alive, keep the love alive, keep that long upside position alive out here. Looking at a chart of good old USB. It's kind of been in vacillation mode for the better parts of 2016, dipping down to around 41, rallying up to about 45, and back down and back up. We are, of course, post-earnings. They had earnings just yesterday, I believe, and so the stock is perhaps now is north of 45, obviously, perhaps hitting the upside of that trend. Our friend here saying perhaps it's time for a bit of a breakout. Either way, he's probably sitting on some cash from those 44s, putting it to work and keeping that love alive out there in USB. Mr. Rocklockster, take us home. What's your view on some prolonged love here in good old Universal Serial Bus?
I know. It almost is like this feels like the same customer as Regions Financial. It just feels like a fund.
There is a bit of a similar air to it.
Yep. A fund wants to be long. They want to get some more financial exposure. And I have to say they're just going after it with close to the money or in the money calls. They're not. They just want they want the big gamma. They want it to happen. And they want it to happen fast. So it again looks like just I want to own it stuff, which is, you're seeing that with if the grease thing goes away, maybe we do start to see that rally at the end of the year if we could touch a high and pick up another 3-4% by the end of the year. But the financials are still, they're not an overvalued sector. It's still like pretty reasonable multiples. They've never totally gotten the tar off them from the financial crisis. So, what the heck? You could see it. You could be a believer.
You could be a believer, and certainly our friend out here is, as he's still riding that wave to the upside. Meanwhile, though, as Google continues its northbound move here in the after hours, we will continue trudging along right on into. It's Thursday. That means it's time for you guys to take the reins, and it's time to dive right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is indeed the portion of the program where you guys get your time here to shine on the old option block program. Send in your questions, your comments, your insights, your thoughts, your trade ideas, all sorts of fun stuff. No shortage of ways for you guys to get that stuff into us. Of course, surf on over to the mothership, the flagship, theoptionsinsider.com. Click on the Contact Us form, and you can fill it out to your heart's content. Of course, shoot us an email, questions at theoptionsinsider.com, or via social media, twitter.com/options, facebook.com/theoptionsinsider, and we're Options Insider on Stock Twits, and most of that's baked into the mobile app as well. So no shortage of ways for you guys to find us. But if all of that doesn't work for you, you can do what our first questioner did and just subscribe to Mark and Andrew's service over there, and then just send it directly to them, and we'll route it here on the show. This actually is an interesting comment. We've been joking a lot here on the show about how China will line you up against the wall and shoot you if you short a stock out there, et cetera, et cetera. We were, of course, being a little silly with it, but one of Andrew's users, actually, who is from China, I believe, took some perhaps well-deserved umbrage with our joking on the China situation and decided to set us straight. And what follows is a lengthy but interesting commentary on this. He writes, I listened to your talk on the Options Insider Radio, puts in parentheses. That's a very good program and a good way to start, by the way, buttering us up for the pain to come. He goes on to write, it seems that there are a lot of misunderstandings about the cracking down on short sales in China. In fact, there is no limit on short sales in China as long as you can borrow shares, very similar to the U.S. shorting stocks. But the main problem in China is the leverage with loans from outside financial companies. A subsidiary of Baba is an enabler of such outside loans. That subsidiary company is the Hangzhou, where I'm from. I'm sure I'm butchering that pronunciation. It has software called HOMS, which expands a single brokerage account into multiple user accounts with or without the brokerage firm's knowledge. Oh, that sounds like a recipe for all sorts of disaster. He goes on to write, the original intended users are fund management firms, but the loan companies use the software to provide loans and control the account for margin risk management. They provide margin loans up to a 1-to-10 ratio. When the market initially dropped 15 to 20%, many accounts will have the margin problems. Later on, the loan company started a manipulation operation. Obviously, there's a little bit of translation issue here from Chinese, but his English is certainly better than my Chinese. He goes on to write, they purposely push down the index futures at certain hours, trigger the market sales, and then they forcefully close the customer accounts. Finally, the Chinese police department stepped in. That really scared these loan operators. Overall, I think it's a good idea to forcefully interrupt the vicious feedback loop and return the market to more normal operations. In China, the Communist Party has to take responsibility for the well-being of the general population instead of, quote, following the rules to allow or protect a few successful guys who figured out how to take advantage of the system's shortcomings. So I think it is good. In the U.S., no one was charged and put into jail for the 2008 crisis. He certainly has a point there. Here we think that following the rules is more important than the results. A little bit of insight into the Chinese mentality. He goes on to write, but the rules have been set up by the guys who purposely keep holes they can exploit. In this case, I totally support the Chinese government. It demonstrates that the Chinese government can correct the problem much more effectively and efficiently. For a society, it is better to protect 1 million people from losing $1,000 each than to allow a guy to make $1 billion through successful trading from a good client. Through successful trading. So, interesting stuff, a little bit more of an insider perspective on what's going on out there in China. Obviously, we were exaggerating. They weren't, at least outwardly, planning to line people up and shoot them, but it did seem to be a bit of a stringent crackdown. Some of the stuff I clearly was not aware of. I don't think Andrew and Mike were as well. Certainly this software that expands the brokerage accounts with or without the brokerage firm's knowledge seems like a very dangerous thing. There's a reason the brokers like to manage and understand their accounts so they know how much risk they have on. If they can't manage the accounts directly, that becomes a very difficult and indeed risky process. And this notion of the loan providers manipulating the stock futures, that is indeed an interesting one as well. We always hear a lot of these allegations that the Chinese stock market is heavily manipulated, but to see some actual material, at least complaints to that effect, is somewhat interesting. Mr. Rock Lobster, you've had the most time to chew this over. You also know this client pretty well, so you know where they're coming from. What was your take when you saw all this spelled out for you?
It made sense to me as far as what could be what. Clearly there was too much leverage in that system, right? And we all know what happens in our system when there's too much leverage. And even with all this new financial regulation and Frank Dodd and all that stuff, they still have not improved transparency of OTC transactions in the United States and leverage you can carry on a major balance sheet. I never saw any of that come out of Dodd-Frank. I guess they had to offload some derivative tradings from FDIC insured banks, but I'm still not sure if that's gone all the way through yet. But here is a case. I think it looks like there was software that allowed certain firms to turn like kind of a mom and pop, margin account into more like a bucket shop. 50% margin is, I would say, plenty adequate for stocks. 10% margin is, you could be blowing people out on any day. So I don't think that does anybody any good. But if you had newcomers to the market and you could tell them you could buy stocks on 10-to-1 margin, of course everybody's going totally nuts over that. So, and that's what we got. So we'll see what happens. I mean, a lot of the stocks in China are still closed to trading. So once everything kind of opens up and gets back to normal, we'll see where that market lands. But, it got bid up too much and it had a pretty good crash and people got hurt, and hopefully they'll be able to go on and, pick up the pieces. But I thought, again, we have clients and, certainly every from every continent but Antarctica, at Option Pit. So I do get stuff like this from time to time, trying to, let me know what's going on in any global situation.
Well, we certainly appreciate the insight. Don't get a lot of people writing in with the Chinese government viewpoint, or at least taking their side at all. So it's always nice to see that other side of it. Of course, the knee-jerk reaction for any real financial professional when they see these types of restrictions is that, this is madness. This is, this way lies madness. We've seen other regimes try to do this with disastrous consequences. It has the opposite effect of what they intend. It doesn't signal confidence. It signals a complete lack of confidence in the market and all these other issues that go along with banning short selling, in addition to, the fundamental mechanics of the market. Liquidity providers need to hedge, et cetera, and banning that. He's writing in to say that isn't exactly the case. They haven't really done that ban. If you can borrow shares, you can still short them. So that is indeed true, and that is a good thing. That should at least keep some order to the marketplace over there. And this is the first, like I said, I'm hearing about that software. So that is indeed correct. That is a troubling thing, and perhaps worthy of a crackdown. And you're right, Mr. Rocklobster. At the end of the day, it does seem that totalitarian governments are a little bit more efficient when it comes to the crackdowns and reforms than they are over here in the United States. Yeah, here we are, how many years after 2008 meltdown, and Dodd-Frank still kind of meandering along. China gets it done in about a week. So a little bit of a different, regime, a little bit different MO over there. Uncle Mike, I know this isn't your bailiwick, really, Chinese short-selling regulations, but still, I'm sure this intrigues you. What do you have to say here to our friend who wrote in to share this insight with us?
Yeah, thanks for writing in. That was very interesting to hear that from someone who's actually there on the front lines. I mean, I've been following FXI, just watching it over the course of the last few months, and the fact that just a big index like China or FXI, it's down over 20% in that time frame. I mean, it's recovered a little bit since its low a few days ago. But when you see something like that with something that big, it definitely makes the eyes get a little bit bigger. The three big things that I've been that I think everyone's been watching over the course of the last few weeks has been Greece, although that was third place on my list, quite frankly, the Iran negotiations, as well as China. And China is one that was the most concerning to me just because of the fact that it did come down as fast as it did. And like you said, in that their government stepped in and did what they were trying to do. I don't know. Maybe we should go with a dictatorship in the United States. Maybe we should try that.
When it comes to efficiency, they certainly are all about that at the very least. Democracies get kind of messy. And, I think we're living in the mess right now. Interesting insight. Thank you for sharing that with us. Anonymous option pit user over there. Since we're talking China, let's dive into this question here from SB94. Great handle there. He or perhaps she writes, "Hey, what's up with the Chinese stock options? Are options going to be listed in China anytime soon?" Listeners, if you've been listening to the show for a while, we talked a lot about this a little over a year ago. April of 2014 was supposed to be the big coming out party for Chinese listed options, and what ended up happening was nothing. It got punted down the line, and instead of this big, dramatic unveiling listing of options in China, we got a bit of a whimper this year. So to answer your question, SP94, options are listed in China right now. We saw the first real listed type of equity options like we think of here coming out back in February. It's actually February 9th. It was on the Shanghai Stock Exchange, and they listed it on the SSE 50, essentially, the ETF that tracks that. That's one of their big index ETFs out there. And so it listed in the beginning, like I said, with only, I think, March, April, June, and SEP. I'll have to get the updated months and strikes on there. Total of 40, 40 strikes out the gate were listed. But still interesting stuff. So they did finally launch, but nowhere near the fanfare that we were looking at last year. Everyone and their mother was talking Chinese options. We were planning on perhaps launching a Chinese language show here on the network in partnership with some partners in that region. And so there was a lot of focus on it last year, I should say. And this year seems to be more of a whimper. Some interesting quotes coming out of the state media over there. They said options could cause greater market volatility, but in the long run may help investors hedge against risk and discover value investing. So a little bit hesitant at first, but in the long run, they're okay with it. One of their chairman of their market regulators over there said it marked a new development in the establishment of a multi-tier capital market, and also injected new vitality into Shanghai's establishment of an international financial center. If you're curious what the logistics are behind the scenes, how much you have to trade options over there, at least as of February when these products were listed, you needed to have an account with 500,000 won, which at the time works out to about a little over $80,000 US, and 1,000,000 won, so twice that for institutions. So if you have that lying around and you want to perhaps sling some options over there in China, there you go. The sky's the limit as long as you really, really like options on the Shanghai Stock Exchange Index, because that's pretty much your only choice. There are futures out there. They launched those in 2010. They've been slinging futures for a while. You guys know we do our great global derivatives volume guessing game here on the show every year. There's a few contracts that pop up over there from Shanghai. I believe Rebuy and others have had futures out there for a while. But yes, they've had futures in 2010, but this is really hopefully the beginning of much more to come from a Chinese options perspective. Mr. Rock Lobster, Uncle Mike, anything to add here on what's cooking over there in China from an options perspective?
Power to the people. I think the whole world should be able to trade options.
Well, I certainly can't fault you for that for that perspective. We are a little bit in the options choir here on this program, but still, at the end of the day, more risk management choices, more ways to hedge your portfolio, more ways to damp down volatility and produce income in a portfolio. Never a bad thing. One of the reasons we heard the government was against it early on, why it didn't happen last year, was that they were concerned, and from that the other listener comment, it seems like they're still concerned with the state of essentially this gambling culture that exists over there in China, and they really wanted to tamp down on that by doing some crazy things like increasing the multiplier to ridiculous levels. I think they eased back on that for this new contract, because I was hearing things like a multiplier of 1,000 and other things that would put it well without of the reach of most retail clients. It seems like they discretion was the better part of valor on that one. They decided to dial it back a little bit. I don't know the exact multiplier, but certainly I don't believe it is 1,000. So that is at least a good thing. We'll stay tuned, listeners. Hopefully we'll find more information come out of China, more interesting names, more market-making firms here in the West will be able to penetrate in there a little bit and spread some of their expertise there in that market. Will be interesting. Right now, it's still kind of Wild West from an options perspective. That may or may not be attractive to you, depending on what you like to do out there. But interesting stuff. We'll certainly keep an eye on it. Good question there, Mr. and Mrs. SB94. Let's see. We got time for one more here. This one comes from Sean. He writes, "Hey, I like to follow an indicator that determines the strength of a trend going in a certain direction. How do these types of indicators typically reflect in the options market?" Back to our well-worn conversation on technical analysis and the efficacy therein. We've all kind of weighed in on not really being big on the technical indicators here on the show, with the possible exception of the ones that are widely followed. And I think that's kind of what he's referring to here, because that's the only way you're really going to get any real impact of any sort of technical indicator in the options is when it's pretty widely followed. Because what's going to happen then is you're going to see some of that order flow being reflected in the options order flow. Let's say, for example, something's indicating a huge bounce to come in XYZ underlying. Well, you probably would see a preponderance of people buying and gobbling up calls. If it is indeed a widely followed index, you'd see that reflected in the implied volatility level of the call wing, and vice versa if it was the put wing, et cetera, et cetera. So you'd see that play out mostly in the shape of the skew, I would imagine, if these indicators are very wide. But again, it's going to be a pretty widely followed thing to generate that much flow. Typically, these things don't really have that much of an impact, but sometimes they do. And since we do have our resident technician over here and the fact that he's looked at one chart over the past year, Uncle Mike, what do you have to say here for our friend Mr. Sean, who wants to know how technical indicators are reflected in the options market?
I think it's very difficult to even gauge that because there's so many different things with which are factored into an option price. In the stock price, the way with which the price is factored is just buyers versus sellers. In the option world, you have 6 factors of option pricing. You have the movement of the underlying, you have time decay, you have volatility, and the list goes on. So I've never really been one to even look at a chart of a specific option just for that reason alone. There's a little bit more to it than just the supply and demand of buying and selling. If you were just to look at the XYZ 40 call over the last 2 months and it's a 6-month option, it might be going down in value just because of time decay, or it might be because of volatility. So I don't think it's something that necessarily applies in an individual option world. And I would encourage you to just, if you are going to look at the chart of a specific option, then make sure you take in all the factors of pricing besides just the movement of the underlying or the movement of the option itself.
Anything to add, Mr. Rock Lobster?
The only thing I would say is normally when things are trending, the vol tends to go down because they're trending. Like realized vol goes down. That would be about the only thing I would look at for kind of a confirmation on that score. But that's about it. Nothing. I don't have a whole lot to add.
But you're right. Yeah, at the end of the day, it's really going to take a lot for any of these indicators to really materialize in any sort of concrete way in an options pricing or in the skew. It's got to be really sizable and really crazy. It could be, like I said, people poising for a bounce. Could be like Andrew said, where if it's trending slowly over time, then you might see that coming in on a vol perspective. But again, it's got to be just a huge mover and a shaker of an indicator to really, it's got to be a very illiquid option, one way or the other, for these things to really make themselves felt from an overall options market perspective. A good question. Keep them coming in. We don't mind talking technical analysis, even if all of us collectively tend to poo-poo it. Uncle Mike accepted. All right, and now it's time for us to keep on rolling right on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is where we tell you what we're keeping an eye on for the rest of the week into the old weekend. Again, we are on the heels, or the height, I should say, of earnings season. Google continuing that rally hard. You thought that $21 straddle was pricey. Well, it's up nearly $60 right now in the after hours, $57 and change, trading right around nearly $637. So that straddle just looks crazy cheap. All things considered. We also had Goldman before the open there, and we had Citi today, and a lot of other names, Blackstone and others. It was a pretty busy day. AMD coming out there as well. Also Mattel, I believe. They who infamously, their CEO resigned in the wake of Frozen Fever. See if perhaps they're doing well as well. Tomorrow, a little bit lighter day. GE and Honeywell, the two big names on the old docket. And perhaps we'll start with you, Uncle Mike. What are you keeping an eye on for the rest of this week into the weekend besides Chinese short stock regulations?
Oh, well, just the earnings in general. Want to see what happens. Just kind of add to what you had said. Also, all-time highs. We're right by them, folks. Keep an eye on them. If this market's going to break out, it's really close to the upper end of the channel with which it has been trading for this entire year. We could have new all-time highs tomorrow, so stay tuned.
Was that a technical indicator you just referenced on my program, sir?
The all-time highs, yes.
I may have to, and you said channels as well, which I believe is a technical term. So therefore, I may have to mute you for the rest of the show. All right. And Mr. Rock Lobster, what do you keep an eye on for the rest of this week, sir?
I'm just keeping an eye on all-time highs. I guess the rest of Europe has to vote. We have a couple more dates and see if China holds up. But, it would not surprise me with and then there's anecdotal stuff. The the deficit in the U.S. is probably going to ring in a low since prior to the financial crisis. Let's just hope they keep the government spending part low. And, all that stuff adds to stability, and the market loves stability. So you want to see Tucson's bull market. The more stabilizing factors, the higher stocks go. It's always worked like that, and I see none of that changing.
All right, that's going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. Great questions from everybody. We love to hear from you guys. Keep those coming via the website or via social media or via Twitter or via Andrew, however you want to get them to us. Feel free. We love to hear your different perspectives on things. But before we go, as always, let me check in really quickly with each of my cohorts here on the old All-Star panel. See what they have cooking that may interest you. Starting off with you, Mr. Rock Lobster. What is cooking in the land option pit?
Our webinar Saturday. You can still sign up. Surf on over to optionpit/events. Understand how to trade time spreads. We'll be going through a lot of examples, understanding really how they work, how they got a shot to make money, and like I said, for the cost of 20 cents on a 10 lot, you could get some learning on. So very few people leave our webinars and do not learn something they did not know before.
I like that's a good pricing structure. 20 cents on a 10 lot. I like that. I can get behind that, sir. Well done.
That's not bad. Not bad.
And if you miss Andrew in between his interludes here on the Option Block and occasionally over there on Vol Views, then of course you can check him out every day, noon Central, 1 p.m. Eastern, over there on the TD Ameritrade platform in the swim lessons room. You got to be a TD client or at least have a paper trading account to check out the live version and to pester him with live questions. But you can always listen after the fact on our network as well. So no shortage of ways to check out Options Oddities. If you like what we chat about here on the old Odd Block, you're going to love Options Oddities. I make occasional guest appearances in there as well for our end of week spectaculars. They're always pretty fun. And before we go, Uncle Mike, what's cooking in the land of RCM Wealth Advisors?
Well, it is the summer, and so in the summer, one thing that we typically like to work with are self-directed traders. And if you are a self-directed trader and you would be interested in possibly working with RCM, we do have over $100 million of assets under management, so we do get a pretty nice commission rate at both TD Ameritrade as well as Interactive Brokers. But with that being said, the reason to come on over is if you want to have some occasional advice on a trade that you're making, that's something with which we can provide. And in terms of the commission structure, some people come over just for that. But the advising part, oftentimes what we'll do is help you in ways with which might save you more than 20 cents on a 10 lot in terms of trade execution, that type of thing. Should you have any questions on such a service, feel free to give me a call at 312-212-3531 or send me an email at mtosaw@rcmfs.com.
I like it. I'm going to quote all my numbers from now on in fractions of 10 lot prices.
I love it.
Just a good way to go, I think, in general life. You go to the grocery store, I'll have that for half of the price of a 10 lot. What? Half of a buck on a 10 lot, huh? What? All right. With that nonsense, I think we'll close out this episode of the old option block. Of course, I want to thank the Rock Lobster and Uncle Mike for joining me here on the old program. And of course, all of you guys for downloading and streaming and subscribing to the show. And we'll see you next time right here on the option block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.